Question number 2, David Bennett.
Mr Speaker, my question is to the Minister of Finance. What reports has he received on the resilience of the New Zealand economy?
The Honourable Bill English.
Mr Speaker, I've seen a recent report from Fitch Ratings, one of the 3 ratings agencies, that says the New Zealand economy and banking sector is relatively well positioned to weather a cyclical downturn in the dairy market. Fitch does not expect lower milk prices in the short term to affect the ratings of the New Zealand Crown or the major banks. While the dairy downturn is of concern as a reasonably significant headwind to the economy, the Fitch report suggests the New Zealand economy is well positioned to manage, supporting a broadly positive medium-term outlook. It says there are risks for the economy and bank balance sheets should the dairy market downturn persist through to 2016. However, consensus expectations they refer to are for milk prices to find a floor and recover later in this season.
Supplementary question.
Supplementary question, David Bennett.
What does Fitch say are the potential consequences of the dairy price fall for the New Zealand banking sector?
The Honourable Bill English.
Mr Speaker, Fitch says New Zealand banks are in a relatively healthy position and should be able to manage this decline without an impact on their credit rating. It says that since 2008-9, banks have underwritten better quality business. Their exposures are well covered by collateral, and exposures above 70% loan-to-value ratios appear manageable. And because of regulatory activity by the Reserve Bank, capitalisation has improved significantly since the last downturn. So the banks, according to this analysis, are well placed, and we welcome the positive steps that the banks are taking alongside Fonterra to support dairy farmers.
Supplementary question.
Supplementary question, David Bennett.
What are the consequences of the recent devaluation of the Chinese yuan for the New Zealand economy?
The Honourable Bill English.
Well, Mr Speaker, there's always going to be volatility in currencies of the countries New Zealand trades with and in the New Zealand dollar, which of course has fallen 25% against the US dollar in the last year. China's recent devaluation shows its ongoing commitment to gradually liberalising its financial markets, and that is positive for the long-term growth outlook of China, although of course the devaluation in the shorter term appears to be a response to softening in the economic outlook for China, and of course that will pose some small extra challenge for the competitiveness of our exports to China.
Supplementary question.
Supplementary question, David Bennett.
What reports has he received on the performance in other sectors of the economy?
The Honourable Bill English.
Well, Mr Speaker, of course, New Zealand has a range of sectors and activities across its economy besides the dairy sector. Early today, the BNZ released the Performance of Manufacturing Index. The PMI for July was 53.5. Readings above 50 indicate expansion. So it is lower by 1.6 points than in June, but it still continues a run of moderately strong results. The New Zealand manufacturing sector has now been in expansion for 34 consecutive months, and the indication is that that expansion is likely to continue. Business New Zealand says the fall in the New Zealand dollar is now driving positive sentiment in the manufacturing sector, which is leaning against the negative impact of lower dairy prices. Today's PMI result indicates support for future growth, although at a more moderate level than the economy was previously running.
Order.
Speaker,
Order.
we could have that one, but we don't mind.
I'll have this one. Grant Robertson, supplementary question.
Thank you, Mr Speaker. Now that 75% of major company CEOs have joined well-known left-wingers Cameron Bagri and Federated Farmers in calling for a Plan B for the New Zealand economy, will he now concede that Plan A is not working?
The Honourable Bill English.
Mr Speaker, no, and I might note that while many of them called for a Plan B, not one of them was able to say what the Plan B should be, which in that respect isn't a lot different than the finance spokesman for the Labor Party. But nevertheless, most of those CEOs, of course, are all running adaptable, flexible businesses which is consistent with Plan A for the New Zealand economy, an economy that can deal with fluctuations in commodity prices and still deliver more jobs and higher incomes to its households.
Why are exports dropping?
Question number 3,